Good evening and welcome to joining our most recent edition of On the Move. I'm Chris Blasi. I'm going to give you a little overview of what we have to talk about tonight, and there is no shortage of subject matter. So actually our biggest challenge is how do we narrow it down to the time we have with you. So tonight we're going to talk about the extreme concerns on everybody's mind. And we're talking about these concerns straddle economics, finance, even social and geopolitical. And these concerns are not just here at home, but around the world. And we're going to focus tonight on the particular institution that has an outsized impact on virtually every aspect of our lives, either directly or indirectly, and that's the Federal Reserve. We know, and anyone who follows the news knows that just the utterances of the Federal Reserve will move markets, never mind their actions and decisions. And for over 2 decades now, there's been a lot of very intelligent people who saying that the Federal Reserve kicking the can down the road by dealing in crisis in ways that are not good for the long term. And I'm talking about the bailouts they did in 2000 with the tech wreck and then in 2008 would eventually lead to a very precarious place where there will be no way to gracefully or easily get out of it. And I think we may be at that point now, and we're going to find out what our other speakers have to say. So that's our focus tonight. And before I get into it anymore, I'm just going to introduce my usual co-host, and that's Checkan. Rich, good to see you.
Good to see you, Chris.
For those who may not know, Rich is the COO and president of Asset Strategies International out of Maryland. Rich has been with ASI since 1996, so predominantly most of his working career has been there. Prior to that, it was very noteworthy that he's a graduate of West Point, and following his graduation in 1987, remained with the military before leaving in 1993, and he left with the rank of captain. So he's a real leader. Couple of years he spent in some other organizations before coming to ASI, pretty much runs the day-to-day operations at ASI, and is a very prolific subject matter expert. He contributes to their monthly newsletter, their news alerts, and for anyone who's actually gone to shows like the New Orleans Investment Conference or such, would know that Rich spends a lot of time on the road running and leading roundtables and also speaking as a subject matter expert. So Rich, great to see you again.
Thanks, Chris. My gosh, how am I going to follow that up? Other than Chris has got even more experience in the industry than I do. He's been in this industry for 30 years, working in financial services and technology industries. He kind of merged both of those passions together as the founder of Neptune Global and the creator of the PMC, Precious Metal Composite Ounce, which he patented and took to market, and we're happy to be a seller of. Very neat instant diversification in precious metals. He's worked for major broker dealers and boutique operations. He's been quoted in the Wall Street Journal, Investor Business Daily, Market Watch, Street.com, USA Today, MSNBC, the list goes on. Chris also produces his own I'm not sure exactly how often it is, but he's the producer of and host of the Great Reset Opportunity Report, which he covers a lot of the issues that we cover in these quarterly briefings, but on a more regular basis. So Chris, as always, glad to have you and glad to introduce you to our guest tonight, who I'm really happy to have a chance to meet with, and that's Andy Snyder. Andy has been a longtime friend. We've known each other, I want to say probably a decade and a half, 2 decades, working through some financial service corporations that we both have worked with for many, many years. I got to know Andy as he was managing editor of the Oxford Club for many years. One of those, shining pedestals in terms of financial services information. And Andy was with them for a long time. We got to know him and work with him in that capacity. And he broke off here recently and formed his own I don't know what you call it, franchise called Manward Press. And he's got his signature free e-letter, which is the Manward Digest. Is that the free one? Okay. And then also he's got, bear with me. I'm lost here in my stuff, but he's also got Manward letter which he contributes and writes for, and he's got some advisory services, the Alpha Money Flow and Venture Fortunes. What I love about Andy is I see a lot of myself in him, in that he just speaks from the heart and he tells it like it is, and he'll talk on any subject, right? So it doesn't just have to be financial services. He'll talk about social issues. He'll talk about this, that, and the other, and he's comfortable in any arena. And it's one of the reasons I think that he has probably some of the most loyal readers and subscribers out there. And I've been in this industry and working ancillarily to this industry for 26 years now. And I can tell you, they love Andy, and I see why. And Andy, really glad to have you on the show tonight.
Well, that's fantastic. I saw the invite come in, and I jumped on it. The opportunity I saw it, to get to chat with you and Chris is an honor. And I think we have some great things to talk about. And I think you're right. We're going to talk about a whole host of ideas. And I think we can cover them, in very unique ways. I think that we need a nuanced discussion of what's going on right now. And I'm excited to get into that.
Fantastic. Well, let's jump right into it. And I'm going to ask you point blank, because it's everywhere. I mean, last week, the cover of the Wall Street Journal, the Financial Times, every major show is leading with this. You can't turn around without bumping into inflation, and more importantly, how the Fed is dealing with it. They've made a shift here recently where they went from dovish to hawkish. And I wanted to get your impression of, what do you think about this new hawkish stance from the Fed, and what sort of impact it's going to have on markets going forward? Sure.
Yeah, you're right. That's the number one question. I think the quick answer is that Jay Powell is just testing the water. He came out hawkish, and he's seen what happens. We saw this with Janet Yellen a few times. She came out, kind of pushed the buttons, was talking it up, and just trying to push the market down, push rates up without them having to do too much. Because we know if they do too much right now, it's going to be trouble. That's the big fear, where we're seeing, rates hit 2-year highs today. Prices of things are starting to disconnect, and it's a lot of psychology out there. I think it's more market psychology than if it makes sense to say more than market physiology. It's all up here instead of the math. And I think that's really what Jay Powell is trying to figure out. And I guess good on him for doing that and seeing how the market's going to react. But you got the big banks and some big name investors out there saying, 4, 5, 6, maybe even 7 rate hikes this year, or a 50 basis point hike right out of the gate in March. I don't believe it. I don't think the Fed, I don't want to be harsh, but I don't think they're dumb enough to do that, because that would push us into a severe recession. Yeah. When you're coming out of, we talk about real rates within Manward. We don't look at the nominal rates as much, but we've got real rates that were -1, just a couple of weeks ago. When you're coming out that low and you start pushing that hard, things are going to start to break. And I think that's what Powell is looking at. I think he's sitting back, watching the markets, watching gold, watching stocks, watching bonds, and just seeing what's happening before they have to start to make their move. So they're smart for that. And hopefully they aren't dumb enough to do everything they say they're going to do.
Yeah.
So if I could just ask, and I'd love to hear Andy's position on this. So what we just said is, the Fed has turned hawkish, but right now it's just jawboning, right? It's not hawkish with any actions. It's just running it up the flagpole as they see, and trying to see how the market's going to react and get a mindset for things maybe being less accommodative. And then you talked about some of the big banks maybe going a little bit overboard, talking about 5, 6 hikes, and where do you think they're actually going to go? Do you think they're just going to have a couple limited 25 basis points hikes?
I do. So I think it's going to be 2 or 3. If you had to force me to do one, I'd do 2. 2 hikes pretty soon. I think we will see one in March. But then we're going to see that the market really start to react. Again, we saw this going into the COVID crisis. Yellen had pushed rates up, and the market was starting to fight back. And if you remember, right before 2020 and COVID, we were starting to look at the inverted yield curve. Everybody was predicting a recession was on its way, and of course it did. But they weren't predicting the COVID. The COVID wasn't part of the market's math at the time. It was fighting back against rising rates and the pressure the Fed was putting on. So we're starting to see that again now. We're essentially back to where we were in 2019. And this economy, from 1981 on, we've dealt with lower falling interest rates. We're not ready. This economy and the math behind it all isn't ready to deal with a sudden long-term trend in rising rates. I think the Fed knows it. The economic setup just isn't there for that, and lots of things will have to change to get us there.
Yeah, one would say the economy is weak to start with right now. It can't handle that kind of pressure, let alone the government being able to deal with the impact on service of the debt. If they did that, I mean, they can't raise it any real amount without hitting a level that they just can't fund, right? And on top of that, you look at, I'm always going back to gold or silver, opportunity cost to owning something else, even opportunity cost to owning a risk asset like a stock or certain stocks. The bottom line is, you're never going to hit that point, I don't think. If you're at 5% consumer price inflation and they take it in 2 years up to 2%, you're still getting a negative real return of 3. That's no opportunity cost. You're still going to go into the other assets as opposed to holding dollars. Right? Am I wrong here?
No, that's exactly right. And that's the big, I use the analogy of, say the temperature is 0 degrees and all of a sudden it's 3 degrees. It's still bone chilling cold out there. And we've, our economy has been used to that since, 2008, you can say it really started, but it was even before that. It's a, interest rate subsidy economy. And you look throughout, more and more, and I don't want to get into the political side unless you want to, but we don't let the markets work the way they need to. They're not, people are talking about the great reset that needs to happen. Absolutely. But will it happen? Will they let it happen? What president wants to have that, or what elected official is not going to vote for something that is going to kick that can into somebody else's administration?
I'm 100% with you there. I don't want to cut you off, Chris. I'll let you jump in, but let markets do their job. Depression is needed when it happens, right? I mean, the markets need that, and deflation is needed when it happens. Let it happen. And I think if we take our medicine, we'll get better quicker than if we try to, treat the symptoms, so to speak. What are you going to say, Chris?
Well, that goes to, the can kicking. The problem is, I bet if everyone looked back and we go back to, I think we were all in the markets at the time in 2000, or at least were aware of what was going on when the tech wreck happened, and they thought that was a calamity, and 9/11, that, that we have to bail it out. It's justified. And people said, look, you should let it run its course, right? But they didn't. And then, then we know what they did to the housing market because of Fed actions and policy. And then we ended up with this big bubble and the quote unquote housing economy, which just was far larger than the tech wreck and what the markets experienced in 2000 and 2001. And they kicked that can, and now we're here, and the pain is obviously going to be magnitudes greater than that. I mean, but let's go back. We're living with negative real interest rates right now, right?
Yeah.
And I want to touch on another thing that is in big debate, and that is, I know one of the Fed's positions are, so obviously interest rates are way behind where the level of inflation is. And they've been maintaining this position that, well, don't worry, it's transitory. It's going to be coming back down, so we don't need. So they are starting to concede it's not so transitory. So I'd love to hear what both Andy and Rich, you guys' thoughts on transitory and how long, and will negative interest rates really be, with us?
Sure.
Andy?
So I think, negative rates, I think by the end of this year, we're, real rates, we're going to see trip positive, not by much. So within Manward Letter, we have something called our modern asset portfolio theory, and we break down our asset allocation based on what real rates are doing. So right now, of course, we're in the negative real rate allocation, where we go much more speculative. But then as rates rise and go negative, we start to pull things in, and as they get 2-3%, we adjust, that sort of thing. and we're looking at that adjustment, and that the reason the markets are reacting now is kind of thinking ahead of that adjustment. They're trying to figure out what that next step is, and the next step's not nearly as intuitive as you would think. A lot of folks are talking about value versus growth, crypto, whether gold comes back, but it's not that simple. So to answer your question, I think the inflation, again, it's so much psychology. We're restoring a house on the other side of our property here, and I've been talking to contractors about lumber prices, just all the prices out there, and looking at how the consumer is adjusting, and a lot of folks are holding off, waiting for prices to come down. So that can be good. It's when people are buying and pushing prices higher that we run into trouble. So there is some neutralizing effects, and we're starting to see that in the data. I always like to say the market likes to hurt the most people, and most people think right now that inflation is going to run away. So I'm a little less in that camp. I'm not going to say I'm in the transitory camp, because I was a big proponent of, flashing the warning light of inflation over a year ago. We've got what I thought was coming. So I think we're going to plateau here, and hopefully, and again, that's why I think that the Fed can eventually back off on their rate hikes, hopefully before we get into a recession.
Gotcha. I don't know. I maybe we plateau, but I still think we're not done yet. I look at consumer price index. I think I said 5, whatever. It's 7% actually year on year from December. And then, but what worries me is the producer price index was almost 10, right? So don't tell me that producers are going to have just a moment of wonderful humanity, and they're going to absorb all those costs and lower prices or keep prices the same for consumers. They're going to raise prices. So consumers are not done seeing price inflation, in my opinion. That will be passed on by the producers. And I'm sorry, but a quarter point here and there, 4 quarter-point rate hikes a year is not going to scare inflation one iota, in my opinion. And I do think you're right. I think the Fed is looking at this as like a test trial balloon, if you will, to see how the market reacts. Judging from what happened today, yesterday, I don't think the market's liking it very much. You're seeing the equities sell off a bit, so far this year. You're seeing the precious metals respond a bit. Haven't really seen Bitcoin move much. It showed a little glimmer and then dropped right back down to 41 and change. I'm kind of interested where that's going as well. I know Chris's thoughts on Bitcoin, so I won't rile him up here, but I definitely seeing the markets taking off for gold and silver. I'm not a cheerleader, and I just think it's overdone. I've heard a lot of people say that, right now, the Fed has talked people into believing that gold and silver are not useful here. They're not inflation fighters, et cetera. And they've scared people with the thought of interest rate increases. But a quarter point here, a quarter point there is not enough to take away that opportunity cost. And basically what you have for folks that can see it is an opportunity to buy really well. And I don't think gold is the only thing here that you can buy well. I think there's a lot of opportunity out there in assets.
So I don't know if Andy has a particular response to that. I actually did want to ask a question though, before we move to the interest rates. So assuming the Fed does 2 to 3 hikes this year, we've seen the market at least as far as the stock market goes, and we're seeing in the fixed income market also, they're responding accordingly. If they actually do come and pull the trigger, and we get 2 to 3 hikes this year, Andy, what do you think its impact is going to be on the stock market? Will it be just that the stock market may end up trading the year sideways? Will it be a down year, which it hasn't experienced in quite some time? Would it be a down year that's minimal, aggressive? What are your thoughts?
Sure, I think it's a buy the news opportunity. If the Fed comes out and says in March, let's say they're raising rates by 25 basis points, that's going to be less fearful than folks think. It's what's being priced in right now. Money's still going to be dirt cheap. We're going to be back to levels still below where we were in 2019. That still is a very accommodative Fed policy. So the stocks are, again, a lot of folks are talking about this shift away from momentum into value, and some of that's there. It's just going to be, right now we're so far out on the speculative margins. We're going to come in a tad, and that's where you see crypto and even the fight between crypto and gold playing out. Whereas if we come further in, crypto has to start to make good on some of its promises, because it's not just going to get money, speculative money. But gold has a great opportunity there, because some of that money is going to flow out of crypto and into gold. And so, as rates rise, I think gold is going to come back to really be that inflation buster. If inflation comes out, that's going to be an opportunity. But those are the sorts of things, I mentioned, right now within Manward, we're in that negative rate category. As we go into that kind of neutral, right around zero, just above it, those are the little nuanced opportunities I see, like blue chip tech stocks. Everybody's talking about the froth in the tech industry, and there's a lot of it, and a lot of it has come out in the last week or two. But
rightly so, given the last couple of years. I mean, that's the area you would expect to benefit, right?
And that's healthy, and that's the market doing its healthy thing. But don't throw out the baby with the bathwater. There's some really good opportunities in there. Facebook, Google, Apple, those companies are, their growth potential, especially if you just look into what's happening with this metaverse stuff. There's a lot of speculation there, but there's a lot of revenue opportunity and a lot of growth opportunity. So, I'm not going to say that all of a sudden it's value that's going to take over, not with a quarter point or 50 basis point hike. It's going to be a lot. The same playbook is going to be there, just a little bit less aggressive.
Thanks.
I got just one question before we move on to another topic. It looks like Joe is asking, can you discuss runaway inflation versus disinflation? When you look at base effects, don't you think disinflation is more likely?
Yes, we're getting into some deeper stuff. I guess I have to answer that.
He's got to be one of your readers, Andy.
Yeah, it's got to be, right? Man, where to go with that?
Nah, just kidding.
It's probably one of those gold bugs. With runaway, I don't even think runaway inflation at this stage is, unless, so all these caveats are, if no other black swans come about, if the government doesn't do something stupid and sends more mailbox money and more stimulus, so runaway inflation, that sort of thing. If we talk about the base effects, if we all of this has to be hinged on the idea that we're not going to print any more money. And that's where you see, the Weimar type stuff, and the runaway inflation is when we just start printing and printing to get us out of some sort of trouble. I don't see that. I don't think anybody in Congress, I don't think the majority of Congress, the voting majority, is stupid enough to get us into some sort of trouble like that.
Okay.
I know one other thing we want to talk about tonight, because you are a letter writer, and at this time of the year, two things people are interested in.
Yes.
What do you see going forward, and then kind of a recap from the previous year. So, going into 2021, share with us some of what you saw going in 2021, or you thought was going to happen or forecast to happen, and how that kind of played out. And is it just something that may be delayed or so let's kind of a recap of your 2021 and your views and forecasts of the market then, and
Sure,
where we stand now.
And then you can probably guess where we're going next. So you might want to get your thoughts aligned. So after we deal with last year, we're going to be looking, what do you see going forward as well?
I'll gladly talk about last year. We nailed it. So it was, we do our big prediction issue every year. We just printed ours a couple weeks ago. And at the time, again, this was Joe Biden hadn't taken office yet. What was it? The third stimulus bill or whatever was still being debated. We hadn't done it yet. And, a lot of the headlines were saying inflation's dead. And so our big prediction was, or my big prediction was, that inflation was going to come roaring back. And more specifically, by the end of the year, the Fed would actually be debating rate hikes. And so at the time, now it sounds like, well, yeah, but at the time, again, all the headlines were saying, deflation, big trouble that way. And I remember a Wall Street Journal headline talking about, is inflation dead, or asking the question, is inflation dead? But, to guys like us, to folks in the industry who were watching, $5 trillion get printed, the idea of inflation being dead was, it was just hibernating.
Watch the money supply. There's your answer, right?
Yeah. So, I mean, I guess in the face of it, it was a very easy call. But that was our big call, again, specifically that the Federal Reserve would be looking to raise rates and actually having the conversations, and we hit it. And so again, it kind of looks a little silly right now, but when I wrote it, I remember it was a pretty big, daring thing to put out there and publish, because it was against the stream.
Gotcha. What about you, Chris? Were all your predictions right this past year?
Absolutely.
Were they? I was three out of 4 losses. I'll explain in a second.
No, I'm just joking. No, well, I think we've been trending in a certain direction for many years, and we just continue to trend in that direction. I mean, no one saw COVID, but in some respects, that's really just exasperating some of the underlying problems that we had. I maybe even moved the timeline up because of the policies that could have put in place in order to so-called save the economy during COVID. And I personally think there's been a lot of damage that's been done on multiple different levels from the coronavirus, not the virus itself, but a lot of the policy and actions that came out because of that. So I think we have a whole additional level of issues that were make the problems back in 2019 actually seem small. And I look at and on a very high level, I look at just the discourse in the country and the division, and that the heels of the two sides are dug in. And at the end of the day, that is not good. Markets work great when things are logical, there's a good rule of law, there's good liquidity, when everything is fair and even and somewhat predictable. And I think there's a lot of things that aren't predictable right now. I think there's a lot of concerns about, just geopolitical actions and such, not going down that road too much. But so I just think a lot of our problems have been greatly exasperated over the last 18 months to 2 years. So what I thought was problematic for the markets before have only gotten worse. Now, the only thing I would say that, and Rich, you may be on board with me, certain assets didn't necessarily respond to these problems as was expected. And that's
where my predictions all failed.
Yeah, and that would obviously be very pertinent to gold. And then the question is it just delayed? Is there other forces holding it back? I mean, some people will say, well, a lot of that money flowed to crypto, and that's another whole different conversation. But I would say, especially being in this line of business, that was one of the things that didn't happen that is a little bit of a surprise. Now, they seem to be behaving, the metals, fairly well coming out of the gates in 2022, but we'll have to see, if there's follow through with that. So, Rich, you want to talk about some of
the... So my predictions last year, I do a forecast article for our January newsletter every year. And last year, basically, I thought that gold would continue to rise. It did not. I want to say it was down about 3.5% last year on year. I said that silver would continue to outperform gold, assuming to the upside. I guess you could say I got that right because it outperformed it to the downside. But that's not exactly what I was calling for. I thought that the dollar would continue to weaken. It strengthened. It was the least ugly person at the dance. So it has risen in stature versus the other currencies. And I thought crypto would continue to be volatile, and that's the one I got right. But one of the attendees here tonight is asking, has trading volume diminished in gold over the past year or two because of crypto? And is the volume of gold trading a good proxy to determine if crypto is impinging on gold? Okay. I'll say this, I don't know if you could talk to this, Chris, but despite the prices, okay, we have seen incredible demand. people are buying gold. Make no mistake about it. Don't let the prices, the spot price, fool you. People are buying gold. We had 2 excellent years, no 2 ways about it. And I expect this year to be another excellent year to follow it up. I wrote this year that last year should have been a no-brainer with gold and silver rising and the dollar falling, and that this year it's even more so a no-brainer. But I'm not willing to make that prediction because I don't know if people are, and I don't want to insult everyone, but I don't know if people are ignorant about what's going on, or if they're too greedy to care, or if maybe it's a little bit of both. Right now, they can make money speculating, and why not do that, right? So again, I don't fault greed. It's a necessary part of our economy and our financial equation. But I think that was holding down gold and silver and other precious metals. And I think at some point, folks are going to come to the realization that they're at incredibly good prices and bargains, and they should be snatched up. Because the long term, gold and silver continue to do their job. I mean, if you look so far this millennium, right, 21 years in, almost 22, gold has outperformed every major index in the US. It's outperformed the Dow, it's outperformed the NASDAQ, it's outperformed the S&P 500. Silver has too, but gold 525% in 21 years, compared to 200 or 300% for the equities indexes. So gold is doing its job. In the short term, you may not think so. It's not making all-time highs every day, but I think it's an incredible bargain. I think it will do well, but I don't know. Money can still be flowing elsewhere. I don't know that crypto is killing gold, or even having a major impact. I think it's having an impact, but I don't think it's having a major impact. We're seeing buyers left and right. Your thoughts?
Well, if I'll just say, I think crypto is having a little bit. I don't think anywhere near what some people are saying. Some people think, I think it's a much greater impact on it than it is having. I also think, and this is a position I had a number of years ago, people were describing Bitcoin and what it was going to do and how it was going to be an inflation hedge and this. And I think, let's just use Bitcoin, the flagship one. It's still trying to find itself. I mean, when people say it's a cryptocurrency, it's not really a currency. It's not like the dollar or the euro, okay? And at the end of the day, it's almost just like another tool to barter, because, there are a few vendors that take it, but you know what most of them do is immediately, as soon as they take it, they convert it to the local fiat currency, because A, it's too volatile. God forbid you hold it overnight and you lose 5 to 10%. So your vendors aren't. So the point is, it's a little bit artificial when people say, oh yeah, it's like money. It really isn't. That's like just exchanging and bartering anything and then selling it to the next person to get fiat currency. So you really have a currency in your hand. So that's, again, this is marketing and perceptions. So, and it's really more of a speculative asset. And guess what? Speculative assets can't be currencies, right? I mean, people speculate on currencies, but not for the type of moves they're looking for with a speculative asset like Bitcoin. So at this stage, it's way too volatile. So little acceptance as money. It is nothing but a speculative asset. So that's one thing I think that got put to bed. I'll agree it's a speculative asset. And it is not behaving the way people thought it would behave in the environment we are right now. I think after last year's pullback, people expected to be far higher now with what's going on and what the Fed is talking about and the need to fly to an inflation hedge. And it isn't behaving that way. I mean, even today was a great example. Started the morning off good, got that big story that somehow Google's going to get involved with Bitcoin. They keep putting this, it's interesting. You see this flow of stories supporting Bitcoin. Oh, this person's going to accept it. This person's going to get involved in buying it. You get none of that for gold. And with all that, managing everyone's thoughts, because that's a big part of the market. I mean, Andy talked about that before, right? It's all about shaping perceptions, right? Gold is still out of favor. And I think, this is actually, not to spend too much time on it, that's when you really want to get into an asset, when everyone is down on it. I mean, you buy low and you sell high. Now, gold's been perking up, but it's out of favor. It's getting no positive press. To me, that's the time you go in. I think Bitcoin, just observing it, it's a little concerning that with all the positive press and everything that's happening, it is still just trading around $41, $42, $43,000. It's really in a trading range. So, Andy, what are your thoughts?
I think you're spot on. So I've been looking at crypto and Bitcoin very closely, and I think I mentioned earlier, it's having not an identity crisis, but it has to figure out its identity quickly. And I think it's healthy to look at Bitcoin as the industry proxy, but there's so much other stuff going on, which is also important. The technology behind it all, and kind of the technological revolution that it represents is really what interests me right now, less so than the speculative nature of Bitcoin and so many of the other, the Dogecoin and so many of those other just far out there things. There's some really interesting things happening related to the blockchain, and you see Google and these guys getting in on that. And, I've been following Square and the whole, financial transaction space for a while. And it's absolutely fascinating. In the last 2 years, just the M&A activity in that sector has been huge. And so, I look at as rates go up, as the speculative bubble falls out, that's probably trouble for something like Bitcoin, that if it can't find its true use, its true if it can't live up to the advertisements. But there's a whole lot of other coins out there, or the technology behind it, I should say, that show a lot of favor. And that's what really, interests me. I'm not a huge techie or programmer or anything like that stands behind some of these far off things, but looking at how the industry has gone into it, and again, the technology behind it, not necessarily the alternative currency, or it's the next the world, Bitcoin's gonna be the next reserve currency. I don't see that.
Yeah, not happening.
Yeah, and I just have to say, Andy, you make a very important point, and that is the technology for blockchain, for the ledger systems it has, and how it can impact record keeping and all in business in general, is completely different than money, right? And people conflate the two, right? So if it turns out many of these coins fail as money, it doesn't mean the underlying technology isn't highly valuable while deployed in areas where maybe it's really more appropriate.
Exactly.
Especially in
I think the problem is conflating the two.
Especially in a world, and this is what I've always loved about the possibility of blockchain, is a world that is desperately trying to put people together peer to peer in every industry all over the place, to have a trusted, chain of events is unbelievably incredible. So that is where the future is. I still think there's a future for Bitcoin. Somebody I was talking to in your old organization, which is still kind of an umbrella or whatever, but your old organization basically said, that world must have Bitcoin. Bitcoin will always be a part of that world, just as the first cryptocurrency, if you will. But I still think, and I've said this from the start, exactly what you just said, the identity crisis. Do you want to be a currency? Do you want to be a store of value? Do you want to be something? What do you want to be? Decide, and then be that. Don't be 20 things to 30 different people. And I think that's really the issue we're dealing with here with Bitcoin right now.
Yeah. I think, comparing it to the tech bubble, I think Bitcoin's like the AOL. It's going to be the big thing out there, and then we're all going to make fun of it someday. But I look at smart contracts, NFTs, non-fungible tokens. The media loves to have a heyday talking about NFTs with art and trading cards. And
I do too. It just baffles my mind that people would do that, but it's the bigger concept, right?
Huge. Yeah, absolutely huge. And I can't wait to see where that's going to be in 5 years. I think, talk about, evolution in the financial space. I think that it's it right there, and it's going to be really cool.
Yeah, one last thing, because Rich touched on it's important. I spent a number of years in the tech business, and the tech business is one of the toughest industries because of the constant change. And usually first to market In most industries, it's great. In there, usually version 2.0 by your competitors displace you, right? And that's the problem with, relying too much on a technology in its current iteration. So, going back to the 70s, all the leaders of the 70s, the Sperry's and the Univacs and who basically, and DEC computing, I mean, they were gone by the mid 80s, right? And it happens over and over again. So, that's the problem when technology is what's behind everything, right? You get displaced. Now with things like the underlying blockchain, that just gets more robust and, but certain products that may rely on that technology, as that technology gets a better version comes out, because you can, calculate faster and cheaper than Bitcoin, which, a lot of people don't even understand that there's a file that continues to grow every time a Bitcoin transaction. And as the file gets bigger, that takes more compute power. And that's based, and like anything else, like Microsoft, right? Why did Microsoft always plagued? Because they never change the original code. They just keep adding more lines of code to try to fix their bugs, right? So then other competing systems come out. And that's the problem. So if you're going to have a currency that's tied exclusively to one technology, there's risk there, or an investment asset, right? But that's completely different than the future for blockchain, which is probably going to be extremely robust, because everything that they're trying to do with, as you said, smart contracts and peer-to-peer transactions, that's all going to be made possible by the underlying technology.
Yeah, I don't see Bitcoin ever becoming a currency. I see governments adopting centralized pretend crypto to be currency, and that scares the living hell out of me, but that's for another show. Tonight, I want to get to what I think everybody wants to hear, is what do you think people should be putting their money in 2022 to be rewarded when we get back and talk this time next year?
Sure. So I guess that's aimed at me. I'll start.
Well, everybody gets a shot, but we're going to you first, Andy.
All right. So I kind of hinted at it. I'm a big fan of tech right now. As you said, Rich, when people are kind of getting out of it is when you want to start looking at it. But it's those blue chip ones. So there's just some like NVIDIA. That's a company that has just had 9 lives lately, in a good way. Everything from crypto to now metaverse to just electric cars, the gadgetry in cars that's happening. So it's just that whole sector, that side of the industry. It's not the high flying crazy tech stocks that have not even no earnings but no revenue. Stay away from that. It's the blue chip side, and companies like Apple, those guys, Meta now, Facebook. I'm not a huge Facebook fan at all, but man, what they're doing with the metaverse and just how they're willfully concocting that industry, by pouring $10 billion a year into it is going to be big. Our big prediction for this year is a recession in the second half of the year. I think the Fed's going to do enough jawboning and make enough mistakes, and I think the springboard of the economy is going to push us into a recession. If you look at employment, everybody celebrates the low unemployment rate now, but unfortunately, the peak of employment has also been a great predictor for a recession about 8 months later. So, the more we see people celebrating low unemployment numbers, the more worried we get. We look at personal savings rates; they're starting to go negative again. They're dipping very quickly because the government's not handing out free money, and we're spending money for things that we don't have that, due to the supply chain issues, aren't even made yet. So it's there's trouble there. So looking at the year ahead, definitely less speculative. I still like tech. Like I said, I like the same playbook. I just like a more conservative version of it.
So let me ask you, and just kind of expand on that a little, Andy. If we go into a recession, say we're 2 rate hikes in and we start to go into a recession, do you see the Fed panicking and slashing rates back to 0? And
absolutely. Yeah. So my big
Runaway.
my big long-term view is that we'll see negative rates from the Fed long before we see anything, normal, back to, I don't even know what you'd call normal now, but 4%, 6%, something like that. We're just going to keep
Something
going.
better than the rate of inflation, right? And that's, we haven't seen that in a long time.
Exactly. And again, if you look at that, a chart of interest rates from the 60s to the 80s to now, it's just, I don't see anything other than a huge shock, which I don't think the government would allow to happen, to stop that. We don't have the gumption to allow that, allow that reset. So we're going to go into a recession. The Fed's going to cook up some sort of excuse to take rates lower. And, I've been talking about the death of cash and all that's involved in that for a long time. And you talk about a central bank digital currency, digitalization of money. It's the perfect opportunity. The infrastructure is building itself. The Fed just has to reach out and take advantage of it. And then we're in a whole new world.
Yeah, unfortunately, not a new world I want to be in, by the way.
Yeah.
In terms of lack of privacy and total government control of your finances, I think that's pure evil. Just between us. Go ahead, Chris. What are your thoughts on 2022? What do you see?
No, I'm on board. I see the Fed is jawboning. They're going to have to do something, and it's immediately going to cause pain that everyone is going to, want relief from. And we're going to go right back to slashing rates and pumping money, and they're going to continue to expand their balance sheet again. I think we're stuck in that until they can't do it anymore because market forces overwhelm them. And they're never going to bite the bullet and give you a real rate of inflation. A real interest rate that equals or exceeds the rate of inflation. Yeah. So that's just not going to happen. So I agree. I think as long as you can, maybe on a very short term, things don't move the way you expect in what we're projecting. But I think if you kind of stick to the fact that that's the most probable by a long shot, what's going to play out, then I think it's not that difficult to position yourself in their appropriate assets. So I think as precarious as everything is, I think it's also somewhat predictable because I think the behaviors of the Fed are 100% predictable, right? Yeah, they'll make a short-term mistake and the markets will then tell them, your policies are wrong, but they will immediately then start slashing and adding liquidity and expanding their balance sheet. So just have to wait a couple months, right? For the squealing and the pain, and they'll go right back to what we all expect.
Understood. For me, like I said earlier, I think what I said last year will take a little time to play out. I think people are going to have to realize that they're jawboning. I don't think everybody realizes that just yet. And I think once they do, they'll realize that there's value elsewhere. There's value in gold. There's value in silver. There's value in the stock markets, right? So the companies that are worth something, that are producing something, that are making a difference in their world, and have for years, will still be doing so, right? So there's always value out there. I don't care what the economy looks like. I do think we could dip into a recession. I just see the way the market reacts to these threats of 25 basis points, for God's sakes. I mean, it just boggles my mind. We're not even talking, by the way, we haven't talked at all tonight about the asset purchases. Okay. All right. So they're going to stop asset purchases, right? They're going to complete the taper in March. So what does that mean? Until March, they're still buying more, and they're not even starting the conversation of getting that off of their books. Right. So make no mistake, by the end of this year, we're going to have more assets on the books of the government than we had at the start. There's no two ways about it. And nobody wants to talk about reducing that line item, if you will. So we've created an awful lot of money out of nowhere. I still think inflation has yet to peak. And I think as long as gold doesn't go on a tear like it did today, or silver on a bigger tear, up almost 3% today alone, too many days in a row, I think you got an excellent opportunity to buy well for the future. And I think you can do so in the stock market. I think you can do so with crypto, Bitcoin right here at 42,000. So, Yeah, it looks like you're ready to say something, Andy.
No, I agree 100%. I think your point about the Fed balance sheet and the fact was it $60 billion a month that they're buying. I think that's a huge.
That's all.
Yeah, just that's all. It's just out of thin air. We'll buy what other people don't want and prop up the market. I think it's a huge point.
So we've been pretty good about keeping up with the questions thus far. I encourage those folks that are listening to go ahead and type in your questions. There's a Q&A box. You can just add to it. There's one we didn't get to. I don't know that we're going to get to be able to delve deep into it here, but one attendee was asking about Basel III. I got to tell you, it's a complicated subject. I don't know we're going to give it its due course here tonight. We might have to build a show around it and pick that guest that comes. But does anybody want to jump on this? Has Basel III not been implemented entirely? I have read that it will not be fully implemented till 1/1/23. What effect do you think it will have on the price of gold and silver? Are you guys all familiar with Basel III, or should we shelve this for a future?
Yeah,
I know Chris has touched on it.
It's
I
definitely.
think you've written on it, Andy.
Yeah, I'm familiar, but I wouldn't take my word on it. Anytime we get into a subject like this, I think implementation versus real world versus what's on the paper is often overdone, and again, what really needs to happen is on the margins, and so I wouldn't put a ton of weight into what's happened, but what's happening, but that's about as far as I'd want to step into that.
Chris?
I would just say that I am aware of it, and I know it isn't fully implemented, but I didn't think it was supposed to be until 23. But to Andy's point, at the end of the day, I think some folks are hoping that there's someone wants to bring, truth to metals prices, like in the Bank of International Settlement. The Bank of International Settlement isn't looking to blow up the world financial system. Yeah. So, they may be pursuing something, and even something may get implemented, but it doesn't mean it's actually going to be implemented in practice until it won't have a negative impact on the markets. And and knowing what actually their plans are and their rollout schedule, they're completely opaque, those organizations. So I know there's an expectation that was going to cause a big move in the gold market. And I hear some folks who've been big proponents of that saying, well, now it's pushed a little bit more, it's a little bit more. I didn't hear about the 2023, but I wouldn't put too much stock in something that the Bank of International Settlement does that is going to upend the world gold markets. I just don't think they're ever going to do that.
I think the hope
won't go up for other reasons, but I wouldn't put too much focus on that.
I think the hope there by gold bugs is that you get rid of the paper, you make it an honest market, and then we get the true price discovery of gold and silver and whatnot. I think that's what everybody's hoping for. We'll see. You can make all the laws you want. Without enforcement, they're worthless. So let's see, one, what they come up with, and two, how are they going to enforce whatever they put in place? And then we'll see if it has an impact on the market. In my opinion, despite whether things are manipulated, not manipulated, they're shenanigans or not shenanigans, gold has done its job for the long haul, and it continues to do its job for the long haul. As long as we measure it with fiat currencies, okay, that are not really backed by anything solid, it's going to go up in value as we measure it with those fiat currencies. Plain and simple, period, full stop. There's no question about this, and time has proven this, and time will continue to prove this, in my opinion, going forward. So I hope that has an impact, but we'll see. Lynn's got a follow-on question. I'll raise it. How do we all feel about buying commodities, and how long, I guess is what she's saying, should you hold them?
Sure. So it's another topic I've hit on a fair amount. I think it was early last year, talking about the commodity cycle and the bullishness there. Yeah. And I think that's a very big opportunity. So, as far as owning them, absolutely. And again, as rates start to rise, as we get out of, again, we're out on the margins of the speculation, the speculative idea of things. As we come back in, that's where these more traditional things are going to come in. We look at gold and say, well, why didn't gold go up when it should have just soared? It's because we're so far out of the norm. But as we come back into that, that's when we're going to start to really see it come up. And a lot of commodities are in that. We're seeing it anything from oil to corn. You look at it.
Yeah, oil, I think it closed. It was actually a better performer than the stock markets last year. Oil, I forget bear with me. I'll tell you what it went up year on year. It was up 62.9%. I want to say, yeah, it actually outpaced Bitcoin year on year last year. Oil did. And I think today it was at 88. It's up another, 25% so far this year.
Yeah.
I mean,
the thing that scares me specifically, not to get too sidebarred with oil, is just the government fingerprint on it. It wasn't that long ago we were talking about how the U.S. was soaked in the stuff, and we still are. It's still there. It's just a regulatory decision, to keep it there and push prices up to force everybody over to electric. So there gets some political pressure on there that kind of scares me. I don't see it going away anytime soon. But 2024, who knows what that'll bring and change. I'm in Pennsylvania, which was a big oil state. My wife's from North Dakota, a big oil state, kind of out of nowhere there for a while. And those booms have gone down. And I guarantee those people are looking at oil prices today and saying, let us go for it. We can fix this problem. So that pressure could come up. A lot of folks are starting to already griped that oil prices are coming up. And it's always funny how right around an election, a big election, prices go down, largely because supply is going to go up. So I'm very bullish on commodities. Oil is just one that short-term bullish, but it just scares me a little bit more than the rest.
Yeah. Plus it's inflationary in nature. I mean, it affects so many other end products, right? So you talked about the producer price index may not be done yet. Oil keeps climbing. I'm sure that number will continue to climb.
Yeah, until the government excludes oil from the price.
Exactly. We'll just take it out of the basket and then we don't have to worry about it anymore. So,
they say oil is the lubricant for the economy because it really is. It just touches so much, right?
Yeah.
So far beyond the gas pump. And the other thing along those lines, people jump on these memes and they go overboard. And I actually did extremely well I do own some things besides precious metals with energy stocks last year, right?
I kind of suspected that, but
because people go overboard, right? They're like, they start talking about the electric cars and the green new economy, and then you get these people like they think it's going to happen tomorrow, right? And then the energy stocks fall completely out of favor. Exxon's at an all-time low. So you know what? It's not going to go away. You move in, and then the reality strikes, right? And then it's not going away. It's not going away for a long time. It's just like internal combustion engines aren't going away for a long time, right? Everyone will not be driving electric around the world, right? People get in a bubble like Washington, D.C., and they're like, well, we all have electric cars. But if you look at places like India and China, they're not going to spend $50,000 on an electric car when they can buy, a $9,000 Kia. So it's going to be a while, right? So people just get ahead of themselves, just the way, back in the 70s, they thought we'd never be using paper again because everything would just be on the computer, right? But they're both here. They actually always kind of continue to coexist. Nothing really goes away completely. But
good point. So Randall's got a question I'd like to share. And I like this one because we're always focused on what should I do to make money, right? So he's like, what should I avoid in 2022? What sector should I underweight or avoid not to lose money? What are your thoughts there?
Sure. So my first political answer is, staying out of the market when you're too fearful to get in. I've heard that so many times over, the last decade. 2009, the market's overdone. 2010, it's overdone. And folks that have stayed on the sidelines over the last
missed
decade,
a lot of
just
profits.
Life changing. So that's my political answer. My more specific answer is, I just looked at heat map of the market last year. And so, like I've been saying, I think it's the same playbook, just a little more conservative. And like biotech last year just didn't have a great, you talk about all the healthcare advances and some of the things we saw last year. Biotech just, it was extremely speculative. There was just a lot of, just not a lot of movement there. So if I had to say stay out of one sector, which, I'm not going to tell people to stay out of biotech, but, if I'm going to underweight something, it's probably biotech this year.
What about you, Chris?
I'm gonna kind of pass on that I'm not going to offer any advice. I'll just use more of a basic. I believe you should be investing in things that you kind of understand. And I think that's one of the challenges with Bitcoin. I think a lot of people don't understand exactly what it is. They don't understand the technologies under it. And I don't mean as a negative that you have to understand the nuances, but if you understand it, you'd know what it's not, right? So I'd be leery of that. And I just, so no one gets it wrong, I'm not an anti-Bitcoin person at all. I just believe it's a speculative asset that needs to be invested with the amount of funds that you should accord something like that. I think the fixed income market's going to be interesting this year. I mean, I think that's something that probably Andy's newsletter focuses on, with how they're going to react with a slow rise in rates and then a probable retreat mid-year. So that could be a very interesting market, but I will not put myself out there as an expert of when to go in or out of it.
I don't have a lot to offer this conversation. I can think of a few different scenarios that over time might become an issue. I don't know if they'll fully play out in 2022. If we do see a slow, steady increase in interest rates, you got to think that that's going to put the kibosh on the housing market, and you might see property values diminish as a result, as demand dries up at higher interest rates. That's a possibility. I'm certainly not a big fan of investing in government debt right now. So I think a lot of governments are making really bad decisions at every level, and I don't want to finance that. I don't think I'll get my money back, but I don't have a lot to offer. What I believe in? I believe in value everywhere. We have a diversified portfolio. I don't just own gold. As a gold dealer, we've got stocks, we've got bonds, we've got currencies, you name it. So I do think that, one other area you might want to look at in 2022. I mean, I'm a big fan of for your wealth insurance, right? Your store of value. I believe in gold. I believe in silver, and maybe for profit, more silver than gold, and maybe some platinum, palladium mixed in as well. So I'm a big fan of bullion, but everything I hear about the rare coin market is maybe something to pay attention to here as well. With all this money sloshing around the economy, people look for other vehicles to get alternatives and diversity within their portfolio and even within sector. And we're starting to see that in the metals market as well, where I'm hearing that at the high end, rare coins are starting to tick up. Not incredibly so, but they're starting to show a bit of life, and that may very well continue. So that's something you might still get some values in the rare coin market, although typically that's a very small percentage of the portfolio. I mean, gold's a small percentage and rare coins are even a smaller percentage of that on top. So just something to consider going forward. So I don't see any other questions unless I'm missing some. I'll take one more look here. Oh, yes. What is your 12 to 24 month projection of the US dollar versus other currencies?
Yeah.
Slip that one in on the chat side as opposed to the Q&A.
Again, it's going to be a continuation of the theme. I think, we could pick some smaller currencies maybe, but I think the dollar is gonna, it's a race to the bottom, and you could say the dollar's winning or losing, but it's going to continue to be the stronger, out of the main baskets. I'm not a big dollar expert, but just what we do, Europe does, it's just we're all tied together. I don't see that tether breaking in the next 12 or 24 months.
I tend to agree.
Yeah, I would say things are going to continue on. I know there's folks that will talk about a dollar collapse, right? But collapse against what, right? It's not going to collapse against the euro or the yuan. It's going to continue to devalue, against real assets. That's inflation. That's what it's going to do. But there is no threat. There is no major currency that's widely used in commerce that is being managed by a nation with a pristine balance sheet and very sound policy. So it's going to just continue on, right? It's going to be here for the next 2 years for sure, and it will be the least dirty shirt in the laundry, as they always say. But that doesn't mean something like, we'll just say gold, because gold, generally trades to the inverse of where the dollar's going. It'll probably continue to devalue versus gold, where gold will continue to go up when priced in dollars. So, but I do not see this, the dollar disappearing.
Gotcha. The only thing I would say is I see the one and only currency, I believe is the only real currency, is the one that will outpace the dollar, and that's gold. And I think it has over time, and I think that will continue. You touched on it, Chris. When you measure against real assets will stand out against a mismanaged fiat. So I think gold outperforms the dollar, but I don't see any other currency doing so at this point. I think we got cut off by one here. So Jordan asks, he says, with the great resignation, people not going to work, but he got cut off, I think. I don't see the continuation of the question. Oh, wait, here we go. And the use of robots, how long before productivity kicks in? Okay, so with the great resignation, people not going back to work, and the use of robots, how long before productivity kicks in? Anybody want to touch on that?
It's a really good question. I think to me, the mystery is the whole great resignation. Where's everybody going? What are they doing?
Yeah.
There's a lot there, and there's some political, I've dug around in that, and I still don't have the answers with that. But regardless, I'm a big fan of, being involved in the community and local jobs and that sort of thing. And I've just been studying what's happening, and we've got some Amazon warehouses moving in, and every job around here is that $15 to $18 an hour job. And they don't require a lot of education, and that's scary. And the automation, the robotics, that's going to play a role in it. It's forcing things out. We're seeing, local convenience stores close because they can't get workers. We're seeing restaurants close. CEOs, the folks in the corner suites, the C suites are going to see that. They're going to fight against that and do whatever they can to drive, a healthy, static business that, doesn't rely on these things. So kind of a long answer there, but I do think that's a big play. And the scary thing is, getting into the political side, you see the minimum, what do you call it? A minimum living wage and free handouts, minimum monthly income or whatever it is, where they're experimenting in many cities now of sending people, $1,000 a month just as a basic income. So we're going to see a lot more of that. And that's what scares me, is we get into that and, modern monetary theory and that sort of thing. You want to talk about a whole nother show we could have. It could be, the reset towards that idea. But that's kind of what this Gordon or the viewer is asking about there. And robots are more productive, and ultimately they're cheaper. So companies are going to go towards it.
Yeah, and I think the other part of that is something I've talked about over the past year is, the great resignation. Ultimately, governments paid people to stay home. And it's hard to believe, but in many cases, they paid them more than businesses could pay them. It's hard to compete when they're just manufacturing money and doling it out, and people are saying, I don't have to work. I can make more money just sitting home. When you've got state and federal unemployment and, stimulus checks and, you can speculate in the markets and make money there too. Forget it. Why go back to work? Let me just enjoy my lifestyle.
Yeah, votes are getting expensive these days, and
Yeah.
we're all paying for
And
them.
that's what it is. The votes are getting expensive. That's well put. I don't see any other questions. At this point, I'd like to kind of go around. I don't know, start with you, Andy, and if you want to just give us your parting thoughts, and then how people can sign up for your newsletter and hear more of those pearls of wisdom as time goes on.
Yeah. So, I mean, first of all, what a great conversation. So if I had to give any advice, it's for folks to dig in and find the nuance to it all. I often write about the headline writers. I kind of pick on them because they're just so basic, and the internet's great, but man, the internet, there's 4 stories on it at one time. It's this huge thing, but everybody's talking about the same 4 stories, and get away from that. There's so much more that moves markets. And if you've ever been part of a news story, the chances of them getting any of the facts 100% right are slim. So imagine that spread across, the financial world and everything that we read and make decisions on. There's a lot of just bad facts out there. So, part of what we do at Manward is we tell stories, we have a little fun, but we dig past that. We love to dive into the historical side of things and build the context for the headlines that we're seeing today. So, I mean, if that's something your viewers are interested in, they can go to Manward Financial Press. Just really simply just Google us, Manward Press. And, we have our Manward letter. It's an annual subscription, comes out monthly. I think it's a tremendous value. We've got some fantastic writers. For libertarians, we have Joel Salatin, an icon of the libertarian world. We have Alpesh Patel, who just got a big award from the Queen for his services to the English economy. So we have some great thinkers, some great conversations. So Google us, Manward Press, and check it out. And again, I really appreciate this conversation.
Yeah, we do. More importantly, they have Andy. And I will tell you, you don't have to dig on the internet. Everybody that's listening here, everybody that registered for the webinar, we're going to go ahead and send out the full video tomorrow. We typically get it out the next day. And in that email, we will have contact information so you can sign up for Andy's newsletter. I strongly encourage you guys to do it. What about you, Chris? Do you have any wonderful diversified products you want to talk about?
Well, one thing I'd like to say is for our listeners and viewers, anyone who likes to follow the precious metals market, including the PMC ounce and the top cryptocurrencies, we released a mobile app, free mobile app, and you can go to our website, neptuneglobal.com, and just follow the links that for either your Android or iPhone. And that's that's just a nice gift to the crowd. And you mentioned our diversified product before, the PMC ounce, which has outperformed on a risk-adjusted basis, gold and silver, ever since its inception. So why is it able to do that? It's a physical product, it's physical bullion, but it's got gold, silver, platinum, palladium in a logically weighted and diversified position. So, here at Neptune Global, we're a investment platform and products developer. And, I came in and saw that as an opportunity in the precious metals world, that there was not a real diversified physical metals product that, that was being offered, right? People were trying to figure out allocations on their own. And I think we do that in a turnkey way. But I encourage people to visit neptuneglobal.com. There's a fact sheet on the PMC ounce and the PMC index. And ASI is a dealer that sells and transacts in the PMC ounce with the public also. So that's why Rich and and Rich is very familiar with the product. But again, I also invite you, like I said, take our free app. If you love to follow the metals market, it's a great tool.
Fantastic. And we'll be talking about that as well. And anybody that want to add it, I think now's a great time, and you can do so with both personal and IRA funds. So don't just think it's for your current bank account. It could be for your future retirement nest egg as well. From my standpoint, I think you know where I stand. I've said it enough times. I think precious metals are undervalued at these levels. I think for whatever reason, people haven't caught on to the value. We're going to put our money where our mouth is and try to encourage you to take a position to help you buy well. So basically, anybody that makes a qualified person or a purchase of gold, silver, platinum, palladium as a result of this webinar, we're going to, with every order, we'll send out a free silver American Eagle. It may not be a lot, but it's something. It's about what today it went up 3% just today alone. So you never know. It could be the gift that keeps on giving. Qualified purchases are simple. 1 ounce of gold, platinum, or palladium, or 100 ounces or 100 face of junk silver. So 100 ounces of silver, 100 face of pre-1965 US silver coins. You buy any of those things from us and we'll go ahead and give you a free silver eagle. And I want to thank everybody for their time. Andy, it was a pleasure. I knew it would be. Chris, as always, and all of you that tuned in to listen and ask these amazing questions. We thank you for your time, and hopefully we gave you something to chew on. Have a great evening and a great 2022.
Good night, everyone.
Yeah.
Bye-bye now.